welcome back to the Gold and Alternative Investments Show here on YouTube. I'm delighted today to be speaking with Stephan Livera. Now, some of you will remember Stephan from August last year when we could meet in person, and he was a keynote speaker at our digital day, and he predicted a whole bunch of things. He was talking about Bitcoin being a different sort of beast. So we're going to dive deep into it. But before we get started, I just want to introduce him. He's a Bitcoin podcaster, and he's the co-founder of Ministry of Nodes. Not quite sure about Ministry of Nodes, what that's all about. I'm sure he will talk to us about that. Stephan, welcome to the program.
It's a pleasure to be here. Thank you for inviting me, Kerry.
Well, I'm sorry we can't meet in person, but hey, that C word just came in and put post to that, but maybe next year. But Stephan, you do understand Bitcoin, and we're living in a totally different world than we were in August last year. There's lots of changes. At the conference last year, you described Bitcoin as a different sort of beast. But before we get into that, can you just explain to our listeners a little bit about your background and why you look at Bitcoin and the economic world that we live in now in I guess, a different sort of way. And there's a lot of people that don't understand Bitcoin. So let's get started with a little bit about your background.
For sure, yeah. So professionally, now I work as a Bitcoin podcaster, right? This is my main thing. But previously, I was an internal auditor. I was a chartered accountant. I studied, accounting, finance, and that. However, also on the side, I was very interested in Austrian economics. Free market school of economics. I was anti-central banking. I was skeptical of fiat money. And so when I came across Bitcoin and...
Sorry, Stephan, I just want to... Why were you skeptical of fiat money? Now, for those of you that don't know, that are listening, fiat money is the paper stuff that they issue and they print into oblivion, which I'm always talking about, that your purchasing power is being eradicated the more they print it. But why do you focus? What's the fiat story there?
Yeah, the focus with that for me was just more coming from a free market school of economics, a free market way of thinking. It's that the supply of money should be set by the market. It should not be determined by some bureaucrat or some politician or influenced by a politician. And unfortunately, the world that we live in, it is driven overwhelmingly by a central bank that allows for this kind of political control of the money supply. And what that does, as I'm sure you're familiar, but just for your listeners, there's this thing called the Cantillon effect. So it means that essentially in this fractional reserve system that we live under, the person who gets the new money first is the winner. And the person who gets that new money later is the one losing. And so another analogy is to think of it like it's a milkshake, and you think you've gone to work and you've worked really hard to earn your money, and yet there's someone else there and they've got the straw in your milkshake and they're sipping out of it, and you're constantly losing a little bit out of it. And it's just this kind of insidious system in a way, because it creates this overarching system where it's hard for businesses to compete unless they're also getting cheap credit and cheap debt. And so we have to think of it really in a comparative sense. And this is why it's useful to think in terms of what things were like under the gold standard, when it was more of an equity-based system. There was less debt, right? There was debt, but it wasn't as much. Whereas now we live under a fiat money, US dollar, Australian dollar, etc., such that there's so much more debt. And in order to be a competitive entrepreneur, it becomes much more difficult for you to compete without taking on that kind of debt. And so it just creates an entirely different environment. And so I was, reading people like Murray Rothbard, What Has Government Done to Our Money, right? So that's a great book, very short, easy to read. So that's a good one for any listeners who are new to this sort of understanding. What is Austrian economics? Why are these people anti-central banking? And so to bring it to your point, to your question, the reason most Austrian economists are skeptical of fiat money, or they are anti-fiat money and anti-central banking, is that it causes what's called the business cycle, right? The boom bust cycle is actually not a randomly occurring phenomenon, right? It's not just like it's not just by, just by chance. Oh, we just saw this huge bubble, right? Because think about it this way, in the real free market, we would see some businesses fail and others succeed, and that's normal.
Yeah.
That's totally normal. We should expect that. We anticipate that. Most of us are comfortable with that idea, right? There's a risk. However, what we should not, like, why is it that we see a cluster of errors and it tends to be in a certain area, right? Why did we see the housing bubble? Why did we see the dot-com bubble? It's because the manipulation of the money is like a root cause of what's causing all these downstream symptoms and impacts. And that's why we're seeing these colloquially bubbles in these different areas, because fundamentally government influence in money, fiat money, has driven these kinds of effects onto society. And so it becomes more of a political game. Who's politically connected, as opposed to who is a genuinely good free market entrepreneur or an employee or a worker who's genuinely providing value to other people in service of the rest of society. And so that is why many people in the Bitcoin world are coming from a libertarian sort of free market perspective. Now, that's not everybody, and I appreciate not every Bitcoiner or even every gold enthusiast is a libertarian, but there's a bit of a correlation there. And so I think people sense that there's a bit of injustice going on, and they want a return to order. And so we view free market money is a way of returning back to order. And we could even explain this as like a fiat money is actually more like the aberration, right? Because historically, thousands of years, it was gold. And then over time, the way a Bitcoin person would explain this and think of this is more like, well, see, there's certain things about gold that, yes, it was the most scarce and, had the right properties that made for a good money. It was the best thing we could use at the time, right? It was divisible. It's, had a high value to weight ratio. It's the most scarce sort of commodity, basically. And so that is why it served the role of money. However, a Bitcoin person would look at that also and say, well, there's also a centralization there. Why? Because in order to send gold, what does it take? Well, it takes, millions of dollars to move it on those big planes, or you have to verify it. And so what's the tendency? The tendency is for it to be stored in large centralized custodians. And so they became the points at which government would then essentially co-opt the system. And so historically, it is true to say that the gold acted as a check against the expansion of the size of the government. Because historically, if you were a government who was spending a lot, what would that mean? It would mean gold was essentially being drained out of your reserves and going to other countries. Because historically, the arbitrage, the way it would work, the way it would play out is people would, buy in one, sell in another to sort of equalize the price. And essentially it resulted in outflows, net outflows.
And a bit of honesty on the side. But Stephan, I don't want to interrupt you, but I kind of do, because
sure, go on.
Does it matter? It sounds crazy, but we're talking about debt bubbles and the like. Is there a disconnect now between the fact that these central banks are just printing into oblivion, and does debt matter anymore? Because interest rates are zero or negative. People are they're kind of used to the fact that they'll borrow more and more money because it's getting cheaper and cheaper. So could the bubble just keep blowing out into oblivion, and who cares about gold or Bitcoin in that sort of a scenario?
Yeah, it's a great question. So what I would say is this is the start of the process. So it's the start of that. Well, it's not the start of it, but you can just sort of see it's the process going on. And so perhaps I think some good analogies, and you might be familiar with this also, is to look back at history and understand what happened in some of these other scenarios, right? In the extreme kind of examples, you look at what happened in Weimar Germany, or you look at maybe in more recent times, you look at what happened with Zimbabwe, right? And so I actually interviewed some guys who wrote a really cool book on this. It's called When Money Destroys Nations. And So I did an interview with Philip Haslam and Russell Lamberti, who wrote this book. And we were talking about what were some of the things that happened through this process, right? So it doesn't all happen overnight. It happens slowly but surely over time. And so typically, someone might get elected and it's on a platform, because nobody gets elected on a straight, I'm going to be a dictator and I'm going to, they get elected on a platform of something like, I'm going to bring you justice and etc. And what happens then is there becomes a debt, like entitlement culture.
Yeah.
And so that is part of it's one of the things, it's one of the stepping stones along that journey. And what happens once the entitlement culture and, let's say, a large welfare state or a large government, it can't pay for these things. Well, how does it do? Okay, it starts to inflate. And so it starts to erode. And so the social, it depends on the country and so on. But for example, social cohesion may start to degrade and so on. But coming back to your point, it's that over time, people start to sense that inflation is happening, right? And it's not just CPI, consumer price inflation, right? Because if you ask the official statistics, they'll say, oh, it's very low, blah, blah, blah. But they're ignoring a few key points, right? That really you might have seen an even greater increase in your purchasing power were it not for the fiat inflation. And then the other part is eventually you start to hit a point where people stop thinking about it in terms of historically, and they start having inflation expectations going into the future. So now they start changing their prices, and so it's a process, and we're just at a stage in that process. So people who want to protect themselves against that process, well, what are the typical actions that they can do? Well, they can start purchasing hard assets. They can start storing wealth in foreign currencies, and to some extent they start going into stocks and equities as well, because to some extent that helps protect you. And so what happens in some of these scenarios in countries around the world is the smart and the wealthy leave. They just go elsewhere because there's better opportunities. It starts to deteriorate. But the interesting question now is, it's kind of like this is almost happening at a global level, so it's almost like, where do you go, right?
Yeah.
But nevertheless, I think the point should be stated that we are moving through a process, and ultimately you have to think about ways to protect yourself. And so the way Michael Saylor explains it, and he's also been a guest on my show, and he talks about this idea of a melting ice cube, right? Now, his company was sitting on something like $500 million of treasury, and he knew that if he didn't do anything with it, it was going to be losing purchasing power at maybe 10% per year.
Oh, wow. That's bigger
right?
than I thought.
Because in practice, right, he's saying that's what it's going to lose, because even though CPI is not 10%, but in practice, what he can actually buy with it, it's going to be a lot less. And so in his scenario, it made a lot of sense because he was sitting on a lot of cash. Now, for whether you are a retail individual.
Sorry, Stephan. So what he did was he put that money and put it into Bitcoin. Is that right?
Yes, in two different chunks of purchases. So I think his first chunk was something like 250 million, only 250 million, right? But and then he did some other operations around his stocks. Basically, he was letting people get out who wanted to get out, and then the net result basically was that he bought about $425 million worth of Bitcoin. And this is in the company. Even in his personal name, he owns some as well, right, in his personal account. And now, that as a company, that investment on Bitcoin is up about close to $100 million, which is incredible for a company that is normally, I think their revenue is about $30 million per year, which is incredible, right? But anyway, the point, and in fairness, the point here is not that he was trying to speculate on Bitcoin because it's going up.
Yeah.
It's more that he was looking for ways to stop his purchasing power from going down.
Yeah.
That was the important reason why he got into Bitcoin. And so we go into this on my show with him as well, but kind of the quick way of it, summarizing some of it is, look, if I buy bonds, well, the real purchasing power of those bonds is going down, or the income stream is going down, the amount that you would need. Equities, well, they're all really high as well. If you look at like a cyclically adjusted PE ratio, they're already high, so you're not going to be expecting a lot more upside on equities to come. And the way he was viewing it is that it's like Bitcoin is just this new monetary way to kind of store your energy. It's a new reserve asset or a treasury reserve. And he was saying it's like 100 times better or 1,000 times better than gold for doing this kind of thing. So that was his view on, this stuff. Now, when it comes to kind of gold versus Bitcoin, I see it kind of like gold and Bitcoin. I think they both have upside. It's just that I'm a lot more bullish on Bitcoin. The reason being, I see it like the world is repricing into Bitcoin, and it's going to be like a long process for this to happen. And also, if you look at the actual comparative sizes, right? Bitcoin's total market cap is, I don't know the exact number, but we're talking 250 billion, right?
Yeah, it's not a lot. It's not a lot. But I want to stop you there because there are some people out there that don't have an idea of what Bitcoin is. So let's start with, Bitcoin came into existence back in 2009, was it?
Yes. Yep.
So it came into existence in 2009. People didn't really understand. I remember Jeff Berwick from the Dollar Vigilante. He came out to speak at our conference in 2012, at our gold conference. He mentioned Bitcoin, and I was like, yeah, that's just weird stuff. Should have listened. Should have listened. But, even for me, I have put a teeny tiny amount into Bitcoin, but I don't fully understand, because a lot of people say, well, it's just speculative. But if you can just expand a little bit on the fact that, Bitcoin is limited. You can't make more Bitcoin. There's 21 million Bitcoin out there. There's always going to be 21 million Bitcoin. Do you think that, because a lot of people speculate on the price, but that's not what it's about, is it? I think you just said earlier that it's about protecting your purchasing power rather than speculating on the price of Bitcoin.
So truth be told, it's a bit of both, right? Okay. I think, truth be told, there are people who are and I think speculation has gotten a bad kind of rap in some ways, right? It's the way I view it. I mean, there's different ways of thinking about it, right? So some people would view it as, hey, it's savings technology. It's, imagine you could store your wealth into this technology that was programmatically made scarce, right? That we know because of the code in the software, there will never be more than 21 million Bitcoins. Now, the common answer, and just to anticipate the common kind of question that someone might have is, oh, but what about all the alternative currencies? Why? How can you guys tell me that Bitcoin, that this thing is scarce when I can just go make a new one? The reality of the answer is only Bitcoin is genuinely scarce. And there's a network effect to this thing. It's like, it would be like saying, oh, I'm going to go make internet 2. Well, no, like the reason you're because you want to talk to everyone else on the same internet kind of thing. And not just that, they basically, Bitcoin has a more of a genuinely decentralized infrastructure and code around it, right? So you can copy paste the code, fine, but you're not going to be able to replicate the network of people who you can transact with, the developers who are using it, the exchanges who support it, the merchants who will accept it. All of these things are just continually growing, right? It's not the MicroStrategy they didn't go and buy any altcoin. They bought only Bitcoin. And right. So there's kind of a network effect factor there, that it's a network commodity. And so you want to be part of that same network as opposed to like onto some other network, because then if you're trading on some other network, well, now you're incurring another spread, right? Every time you're moving, right? And so, and also it's the technology in terms of securing it and using it and so on is kind of more mature and more stable. Although obviously it's still, like, historically speaking, it's still early days in Bitcoin's life, right? Like in 2009 to where we are today in November 2020, it's still relatively early, right? I think it's one of those things that it might be another 10 years before we see like huge adoption, but I think it just naturally moves in these big cycles. And so what we have typically seen is there are some of the earlier people or people who've been around and they understand it and they're more higher conviction about this because they are kind of projecting out where this thing is going, right? They are looking at, well, hey, if I leave my money in fiat, in US dollar or Australian dollar, I'm losing over time. But with Bitcoin, there's massive upside because it's still such an early market, and it just has qualities that set it apart from any other potential money. Reason being, it's so much more scarce, right?
And it's tiny. The market, like, it hasn't had mass adoption at the moment. It's like if you go and talk to the man or woman on the street right now, they're like, I've heard of it, but I don't understand it. And I
Yeah.
think it's the technology behind it. And then you've got people like Peter Schiff turning around and saying Bitcoin's going to go to zero, possibly because he lost his Bitcoin. And I wanted to ask you about that. What happens if, because even myself, I get concerned because I can't, unlike my gold, which I can touch and feel and say, pick it up and sell it. With Bitcoin, it's a digital, it's out there somewhere, it's not really touch feel. And what happens if I so-called lose my Bitcoin? And I think that that's a concern for some people. If you go back, a lot of people had Bitcoin on the Mt. Gox exchange that went belly up. What do you say to people that are a little bit concerned about a technology failure, which could mean that a loss of their Bitcoin?
Right. So a couple things there. So we have to distinguish there between when people leave their Bitcoins on an exchange, right? Which is kind of equivalent to like, leaving your money in the bank account as opposed to withdrawing it, right? So what we try to recommend people to do and teach them to do is learn how to self-custody your Bitcoin. So that's part of it. And then also, yeah, there are some technical, like you need to learn how to improve your technical ability to store Bitcoins. Now, when people are just getting started, some of them choose to, let's say, go sign up with an exchange such as Bitaroo or Amber in Australia, and they buy those Bitcoins and leave them on the exchange. Now, maybe when you're just getting started, fine. But as you learn, then you learn how to withdraw those Bitcoins into your own custody. And you might use something like a hardware wallet for that. So common ones, a Trezor, Ledger, Cold Card. There are a few examples there.
Sorry, I'm just going to bring this up.
Yep, that's a Ledger Nano. Yeah, it's a common
There's
one.
your Ledger Nano. But Stephan, you and I will talk later because I've got the Ledger Nano. I just haven't worked out how to take them off the exchange, but that's okay. I'm learning.
Yeah, of course. Yeah. We are happy to, and that's actually what Ministry of Nodes does. We're a business to help teach people how to do this. And so what you do is essentially once you use one of those hardware wallet products, you can basically use it to think of it like you're withdrawing those Bitcoins from the exchange to your hardware wallet. Now, it's a little like I'm simplifying there. There's a little bit going on underneath, but I'm giving you kind of just an easy way to think about it. And then what you do is you keep a backup. So you might write down, you'll get a 24-word backup. And funnily enough, that 24-word backup is actually your backup if you lost the device.
Right.
So that is how you can back it up. So that way, such if you lost your device, as long as you've got that word backup somewhere else, you're still okay. And so then the next level is looking at things like getting a metal product to back up those 24 words so that if your house went up on a fire or whatever, that you still got the metal piece and that's still got your Bitcoins.
You know what the funny thing is? I've got that metal piece as well. I'm like, what is, like, I bought it and went, oh, I don't even know what that is. So for those of you listening out there, I am an absolute beginner, but I do understand, and I say it to everybody, hedge and diversify, because right now the central banks are just, those printing presses are going, and
Exactly.
I do want to get into that as well, Stephan, because so many people right now are being supported by fiat currency because the governments globally are turning around and saying, well, we've got a COVID pandemic. People are out of jobs. Here, have some more paper. I call it the funny money.
Yeah.
Have some more, have some more, have some more. And I think we're getting into that thing is the government will always look after me. What would you say to the fact that we have massive government stimulus at the moment and it is ongoing and they keep, I guess, kicking the can down the road because no government wants to be in power when the emperor has no clothes.
Oh, of course. And that's the thing. They don't want it to collapse on their watch because it looks bad for them. And they're not as able to kind of, even though really it might not, in fairness, it might not have all been that current leader's fault. It was actually the kind of continued bad decision after bad decision after bad decision for decades that drove this. Now, I'm aligned with you on this. Like, I think the government has basically promised too much and is essentially pushing too much debt and taking on too much debt and putting that onto us and onto the next generation and onto the next generation who are going to be paying for that debt. And unfortunately, the system now is slowly getting to a point where if you look at the demographics of it and the numbers of it, it just looks like essentially they are going to have too few people producing and too many people taking out of the system. And so if you are looking at that and you're aware, you also have to think about, what do you think the government is going to do about it in 10 years time, 20 years time? Well, it might well be that you've got to think about their menu of options, right? And you have to think about what's more likely. Are they likely to try and do some kind of debt jubilee thing, or are they more likely, and are they likely to raise the taxes? Are they likely to try to inflate harder so that they don't have to repay you? So that they can repay all those debts that they owe just in money that's worth a lot less, right? Now, the reality is it will be some combo of some of these things, right? They may raise some taxes. They may look for ways, for example, they might try to come after everyone's superannuation and tax that. It's a huge pot of wealth that they can just
Here in
come and tax.
Australia, yeah.
Yeah. Or they might go after the high net worth people and say, hey, you are not allowed to have this much money. We're going to tax you and pay, etc. Right. But I think you've also got to look at the inflation. I think that is going to be the most likely outcome, is that because it's like, obviously all the options here are bad, but which one's less bad from the politician's point of view, from the bureaucrat, from their point of view, printing more is probably the least bad of the bad choices. And so this is what allows them to kind of push the cost in a hidden way, because if you explicitly raise the taxes on people, they'll get angry, right? And yeah, you can do a little bit slowly and raise them a little bit, raise the taxes a little bit, but really the inflation is like a huge way for governments to continue spending without necessarily facing as much of the cost or the pain that they otherwise would. So if you're a smart individual and you're thinking ahead, well, do you really want to be continually buying things that the government continually is inflating or reducing the value of? So straight away, we should be skeptical then of holding government bonds and of holding too much fiat money. So what people are doing, and I think this is like aligned with what the micro strategy guys are doing and other people are doing, is they're just looking for other things to keep their wealth in.
And that's what I was going to ask you, because you said before that people are investing in real assets. Now, here in Australia, real assets would include property. Now, the property market here, you would think, with people losing their jobs and the businesses will, in my opinion, there's many businesses that will not be able to survive, including restaurants and theaters and all the like, when you can only have 25 to 50% of your customers in at any one time because of COVID safe rules, you can't stay in business.
Of course.
However, the property market, the real assets are going through the roof. Do you see that as a safe haven for people to protect their wealth? Or do you see that as a house of cards that potentially, again, emperor has no clothes and people will not be continuing on that road? I'm just curious your views on that.
Yeah, I certainly, I think it's more in the house of cards scenario. But for me, so I've been kind of skeptical or bearish on Australian property for a little while, but at the same time, they can keep the party going.
Yeah,
that's kind of what's going on here, right? So there are some who are kind of very famously like super bearish, like someone like Steve Keen and people like that, who are very like a super bearish Australian property. But I think what they missed is that the government can just keep the party going.
yeah.
So I would not invest like I wouldn't go to the level of saying, oh yeah, I'm going to short that kind of thing, or I would, it's more just like I would choose not to invest in some of that, because as you were saying, a lot of people are reliant now on things like, even like in the short to medium term, things like JobKeeper and that are probably keeping some of this going. And once they take that away, it might make it really difficult. And you were looking recently, there was a CBA. I think CBA came out saying, oh, okay, if you are good on your loan up until like COVID, we're not going to foreclose on you. I think they're going to give people like another year or something like that.
Another couple. It's another couple. CBA have come out and said, listen, if you were good on the loan before COVID, you don't worry about it. We're not going to foreclose on you. We'll keep looking after you. So I can just turn around and say, I've lost my job, I can't pay my mortgage, and they won't force you to sell.
Yeah, and they'll just wear it, right? Which, I mean, who knows what the other big banks will do? Maybe the other big banks will try to do similar. But at the end of the day, I think you want to think of Bitcoin as like this. It's like an option to have something that is outside the control of any government. right? And so governments can manipulate things and they can lower the interest rates here and try to pump it again, as we've seen with the RBA, right? But they can't stop you using Bitcoin, especially once you've learned how to self-custody Bitcoin and learn how to operate it for yourself. And so that's why, we can think of it like, I think of it like this. It's like a defensive technology. It's a game-changing technology that, it's almost like the printing press or something like that. It's just like going to be it's going to be a dramatically changing technology that gives people a choice out. And it achieves things that a human institution could not do, right? So in this way, no human institution could stop inflation, right? Every time, if you look back in history, you'll see so many examples of kings who went and did debasement, right? Monetary debasement and etc. Think of it like whoever can print money will. So what's the only way to stop this inflation stuff? Is to create a new neutral digital money system where nobody controls it. Like it was encoded in and nobody can change that 21 million limit.
What do you say to a lot of the governments globally are talking about a new digital currency that they control, which, in theory, what I'm hearing is that they'll come up with an app, and instead of having your money in the bank, they'll say you've got to put it onto this app. And I said yesterday, I was doing a little YouTube live, and I said, look, it's the loss of freedom and liberty that we're seeing, because you won't be able to get that so-called money, if you want to call it, that's not really money, currency, whatever you want to call it, this digital stuff from the government, unless you've had your vaccine, unless you've done certain things that the government wants you to do. And I can see that happening. But do you think, because it's a digital currency, what's the difference between that and Bitcoin? Now, I know Bitcoin is limited to the 21 million, but I guess people could it's so easy. They'll just turn around and say, well, I've got my digital currency. I don't need to look at anything else.
And look, you're right. I think you've basically summarized it. I think essentially it'll come down to convenience. People will use it. I think people will use them. But fundamentally, there's not that much difference between, like, it's not that it's going to offer so much greater functionality for you and me and the retail, the regular individuals. Really, it just offers government a lot more control, surveillance, and these kind of possibilities to say, oh, look, if Kerry didn't take her COVID vaccine, we're going to cancel her money, or things like that. Or what they might even start doing is really differentiating the treatment. They might start saying, oh, you get this interest rate, or you get that inflation rate. Like they might literally start going to that level. So people who actually want a free monetary open system, that's where Bitcoin comes in. And I think fundamentally, if you just look over time, I think the key point really, like, yeah, sure, people will use central bank digital currencies, but over time, they'll see the price of one going, like Bitcoin, going up because of the scarcity. So that's how I see it playing out longer term.
Can the governments come in and create a system within a system? Can they control Bitcoin at all? Can they turn around and say, we are going to ban Bitcoin in Australia?
So, yeah. So, I mean, there's a few different points. So so if they were to try to create a system of control, etc., like, I guess just to answer the first point, to some extent with AML laws, anti-money laundering laws, and KYC, know your customer, and things like that, they can sort of regulate the in and out points, right? And typically that's exchanges. But that doesn't necessarily stop people who learn how to self-custody and self-verify and use it in the more self-sovereign way. So that's kind of the first point. But the second point, and certainly it's possible the government could ban Bitcoin. I just think it's unlikely. Now, I guess there's a few things we can tease apart there. So firstly, we have to think about what it would take for a person inside the government to try to ban it, right? They would have to learn about Bitcoin. And oftentimes there are examples where really once people have started to learn about Bitcoin, then they want some for themselves, right? Or their son might have some Bitcoin, or their daughter might have some Bitcoin, and they're not going to like go after their own son or daughter. So I think in practice, what we'll see, and certainly look, governments can make mistakes, but I think really there's this principal agent problem, right? Because if you as an individual want Bitcoin because it makes you more wealthy because of number is going up, right? And the other factor also is I think a lot of governments will treat it like this. If you can't be the one in charge of the whole world, like if you're not the US, maybe you're better off using an open standard, right? Rather than you trying to make your own money and like it's not the best one and other people aren't using it, you can like be a part of the open standard. So I think, and we're going to see jurisdictional competition here, right? We're going to see some countries, maybe some will come out and ban Bitcoin, but then other smaller ones will support it and say, hey, come here, we'll give you tax incentives, we'll give you residency, or we'll give you something, right? In the same way that you're seeing countries now try to promote and say, hey, we want to allow digital nomads to come to our country. We want,
like I think Estonia just did that, didn't they?
yes, they had an e-residency program, and I think recently they came out with a digital nomad residency or visa or something like that. I know Dubai just recently is coming out with like it's called a virtual residency program. The idea is, you can be a remote worker and go work in Dubai and things like that. So you can see this angle. There's an angle here for competition.
Yeah.
Another angle is we may see at a more adversarial level, countries like Iran or Venezuela get into Bitcoin more. So it's known right now that Venezuela has accepted Bitcoin for some like government services. And there was also discussion around Bitcoin mining. So sometimes these central banks will try to say, if you want to be a Bitcoin miner in our country, you've got to register with us.
Yeah.
And also there was some recent news in terms of Iran, where now I don't know if this has been fully confirmed, but apparently the Iranian central bank was basically saying, if you want to be a Bitcoin miner, you got to register with us and you got to put those Bitcoins through us. Reason being, they want to use those Bitcoins to import things and evade US sanctions. So you can sort of see it's sort of like, while some countries might want to stop it, other countries will want to use it because they know it gives them possibilities to send money around the world that were not possible before. And so the other thing as well, even from a US government perspective, some of the US government senators, one of them, I believe, Patrick McHenry, I don't know his exact position, but he was coming out saying there's no capacity to kill Bitcoin, right? And so if you can't kill this thing, then you're going to have to learn to live with it, and you're going to have to learn to adapt to a world in which it exists and it's an option for people. So I think it's a very complicated world out there, and there's all these different moving pieces. And so I think fundamentally it just makes it too difficult for any individual party right now to actually stop Bitcoin. And I think that ship has sailed to some extent, because Bitcoin is like this technology that keeps growing and growing and growing, and more and more people are working on ways to make it stronger and more resilient and more robust against attack. Now, it's not impossible. Certainly, we have to be honest about that. It's possible somehow that there's some unknown thing that we don't know about, or yeah, right. But fundamentally, the longer it's been around, the longer it will feel like it's just part of the furniture, right? Like when the internet and the World Wide Web were new, people felt like, oh, I don't want to put my credit card on an online site. And now,
remember those
COVID,
days?
everyone does it.
Yeah. There was a lot of skepticism
So I think it's
the beginning, and now it's normal.
So what I would say is, go on.
No, you go on.
Yeah, what I would say is, it's one of those things where right now it's massive opportunity, right? Because it's hard. It's like, if you could buy stocks in the internet back when it was early, right? And you could see where this thing was going. It's kind of like that. Buying Bitcoin now is still extremely early, despite all the press and so on. It's just because a lot of people don't know how to use it. They don't know how to buy it. They don't know how to interact with it. It's still extremely early, is what I would say.
And there is, I guess, right now the Bitcoin price. I have to bring it up. The Bitcoin price, it has had a bit of a run. I think it's at about 19,000 Aussie, which is about 12,000 US. It has had a big run, because
it just breached 14K US.
14, there we go, 14K US. Back in March, it was about 3. Now, there are those pundits out there that are saying that there's going to be a bit of a pullback. I'd like your view on that. And then there's people like Raoul Pal, I should say, of Real Vision, who is coming out and stating that a Bitcoin could get to $1 million. Now, pretty crazy numbers, but I guess when you've got printing presses going 24/7, that number's not so insane. What do you say to those people? And what do you say to people that are looking at it and saying, wow, one Bitcoin, 14,000 US? Where do you see things going in the short and the longer term?
Yeah, so I see this like Um, so Bitcoin tends to move, at least historically, it moves in 4-year cycles. And I think we are the feeling within the industry, right? We're seeing more signups on exchanges, more wallet downloads. I'm seeing more podcast downloads. It kind of, things are kind of indexed with the price. And it seems though that there's a bit of a tension out there. A lot of people are signing up, like companies are getting a lot of new people trying to buy Bitcoin and so on. So what I'm anticipating is that probably next year, so we're talking over the next 12 to 18 months, I'm expecting like that big bull run to continue. I think we're kind of really starting this new bull cycle for Bitcoin. Now, will it be volatile up and down on the way there? Yeah, sure, absolutely. So I see it like short term, we are sort of rising back up kind of slowly but surely. And we're hearing about companies who are trying to accumulate, but without moving the price up too much. And that's why we're seeing this kind of action in terms of like, it sort of dips a bit, but then you see all these people running to buy some. So that's kind of my take on the current sort of market action with Bitcoin. And of course, longer term, I'm extremely bullish on Bitcoin. I think literally, I think the price of Bitcoin is going to like millions of dollars per coin, just like long term though, because again, it comes down to what's your view of the world. And my view of the world is that Bitcoin is not going to be stable where it is now. It's either going to be zero or it's going to be like, $10 million a coin, but it's just going to take like 10, 15, 20 years for that to play out. And we're just extremely early, like, because most people haven't conceived of Bitcoin yet. They think it's a gamble, they think it's a scam, or there have been scams that use Bitcoin, even if Bitcoin is not itself the scam. So I can understand why it's difficult for people to understand that. And also it kind of takes a certain level of person in terms of intellect, enthusiasm, and so on, like in the Western world today to grasp this now. Whereas people in the developing world, they might see this more as like, hey, I'm in Turkey or I'm in Argentina and I'm seeing a really big blow up of my purchasing power. They might in some ways more intuitively grasp the need. So the thing is, I would distinguish, think of it like this. A lot of people who want to learn about Bitcoin, the reality is it's going to be pain or greed or necessity, right? These are the real things that are going to drive people to Bitcoin, as opposed to people who came to it from a more intellectual or academic or kind of out of luxury, if you will, quote unquote luxury, where I think over this next few years, as more and more countries around the world start to inflate harder, you'll just naturally see more and more people around the world look to Bitcoin out of necessity. And certain countries in the world are already at all-time highs in their, in their local currency, just not in like US dollar all-time high, right?
Yeah. So do you said a moment ago it could go to tens of millions or it could go to zero. What do you have an opinion that it could go to zero as well? So it is still, there's some speculation around that.
Sure. Yeah. So for me, I see it like, I think it's much more likely to be on the tens of millions side, obviously, right? I just think if there were to be something that we're not familiar, we don't understand yet, or if there were to be maybe some extremely unlikely problem with the cryptography that, we don't know. But in reality, the system is kind of built in a way that it's continually becoming stronger and is continually being strengthened. And so once you start researching more and more about Bitcoin, you start to see the ways in which Bitcoin is being strengthened, and you see the ways in which people are like looking at ways that even if something went wrong, they could kind of restart the ledger in a new way to kind of keep things going. And so it's really difficult to see how it effectively gets killed. I could see ways where, let's say, a government could come out and slow the adoption of Bitcoin in certain countries, but maybe not globally even. So it depends. Obviously it does turn on things like public opinion and things like that, right? But fundamentally, I see this like, it's kind of like an Uber, right? Like my friend Vijay Boyapati, who talks about this as well. It's kind of like Uber, right? When Uber started, they weren't technically legal in a lot of the cities that they operated in. However, they had a lot of drivers and a lot of customers who really loved the product, and that gave them a political protection. Now,
Yeah,
in the case
that's a
of
good analogy. Yeah.
yeah, and so in the case of money, there'll be people who fight and die for that because it's worth so much more than just being able to transport yourself around. It's your money, it's your life savings. So
Yeah.
there'll be a lot of people who will fight very hard for this. They'll lobby for it. They'll donate politically. They'll do all this stuff, and people will fundamentally fight for it. And if not, they'll probably leave to a better country for better treatment with it.
Well, we're running out of time, Stephan. I've got 2 more questions for you. The first one is, what would your advice be to people out there in terms of allocation? We quite often talk about the allocation of gold, 5%, 10%. Some people are saying 20%. I still like gold. I'm a gold nerd. But as I always say, hedge and diversify. What would your advice be to people out there who are just getting to understand Bitcoin?
So I guess I can't give like investment allocation stuff. But what I would say is start with a small amount, whatever you're comfortable with. Like even if it's $50, right? What I would say is just put your foot in the dip your toe in the water. Basically, just dip your toe in the water. Look at some of these services such as Amber if you're maybe not as tech savvy, or if you've used like a stock interface before, then bitteroo.com.au is probably a good one. I don't get paid anything for that. I just think
I don't get paid anything for this either.
Yeah, so they're some of the well-known Australian kind of options that I tend to point new people to, and I'd say start learning more and like check out my show, Stephan Livera podcast.
That's what I was just about to say. How can they find you, and where can people find you? We've got stephanlivera.com, and what do you offer people?
Yeah, so my show hosts many of the leading Bitcoin and Austrian economics thinkers, developers, CEOs, and builders in the space. And so my show is one of the really leading shows globally in terms of Bitcoin. And so this is one of the fastest ways to get up to speed on Bitcoin. So I would say anyone who's interested, get a podcatcher application like Pocket Casts or Antenna Pod, search Stephan Livera podcast, and just go back to episode 1 and just kind of listen to the first few and then kind of go through the list and just pick interesting episodes or guests. You'll see there's some pretty big names on there like Raoul Pal, Jack Dorsey, Michael Saylor, all sorts of people.
You've had some great guests on. It's amazing. Well,
Thank you very much. Yeah.
You are my great guest today. And one of your comments recently was, I see Fiat finance types begrudgingly admitting that they have to pay attention to Bitcoin or be bullish.
That's right. Yeah. So I think some of them are just kind of, they run in circles where it's not cool to be pro Bitcoin. So you're sort of seeing where in the past they would totally just, talk down about Bitcoin or poo-poo Bitcoin. Now they're kind of getting one more level of like, oh, okay, fine. I guess I got to pay attention to it. Eventually they're going to come all the way around. But it's a difficult thing because you have to question so many different things of what we're told about what money is, what it should be, what is the real risk-free rate, what shouldn't it have a return? All these kinds of questions. Yeah, it just takes a lot of reading and learning and listening to get to that point.
Yeah, because we're not taught it in schools, and we're not taught what money really truly is. And I think, as you just said, get onto Stephan's podcast, start from episode 1. Go all the way through. And I always say this to people, be resourceful, get educated, listen to people like Stephan, who's had some amazing guests on his program, follow him on Twitter at Stephan Livera, and make sure that you understand the new digital world that we're entering into. And as Stephan just said, it's pain, greed, or necessity. It's not going away. It potentially is just going to get worse. You need to stay educated. You need to follow people like Stephan. Stephan, I am so grateful for your time today in helping my listeners understand not to put their head in the sand, but to wake up and understand the new digital world, which is inevitable. Any final thoughts?
No, I think you said it very well. I would just say, yeah, it's just it's going to be a journey of learning, and so you're just going to have to be okay with that. But Kerry, it's been a pleasure chatting with you. So thanks for having me on.
It's been a pleasure chatting to you, and we'll get you back on soon. Thank you so much, Stephan. We'll see you next time. Thanks for joining us on the Gold and Alternative Investment Show.